All right, what is up, tycoons? What's up, traders? We got to talk about some of the top dividend stocks on my watch list heading into 2024. SWK is going to be one of them. This is Stanley Black & Decker. In 2023, this stock went all the way back down to its pandemic lows, and it looks pretty promising. Okay, so we're going to break it down from a technical analysis standpoint. This thing could easily see 114 to 137, potentially even higher in 2024. We'll take a look at KMB. This is Kimberly-Clark. All right, Kimberly-Clark is also setting up. This is another stock that came down to pandemic level prices, but that was back in October of 2022. So it hasn't fully recovered back down to those pandemic prices, but as you can see, it got very, very close. This is another one that I'm watching. All right, and then we'll talk about O, which is Realty Income. Okay, Realty Income is looking really good right now. We'll break it down on a weekly time frame, okay? And there's a potential we could see a breakout in 2024, sending this stock back into the $60 to $70 price range potentially. Okay, we'll look even closer on a daily time frame so you guys can go over some of the current levels that you guys want to pay attention to. But as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually put out a completely free newsletter that I started just a few months ago for you guys, okay? Giving out free valuable finance content, free trade ideas too. Okay, this is what the trade ideas will look like. Basically giving you guys a description of what it is that we're looking on the chart, showing you the chart itself. And many of these trade ideas have worked out very, very well. There's a website associated with the newsletter, so you can go back and read some of the previous articles that have been sent out. But if we were to take a look at three of the most recent ones, we could see Teladoc went up over 14.5% since it was published. PayPal ran up over 10%. And Rivian ran up over 40% since it was published. So it's a matter of quality over quantity. Don't worry, guys. I'm not spamming your inbox every single day with 5 to 10 different trade ideas trying to brag about one penny stock that mooned. Rather, it's about high quality setups, and I also go over how you can manage your risk because that's a very important part that many people forget to mention. Now, if you want to, you can also just sign up for the Investment Intelligence Discord directly, okay? There's a link in the description. It's only $10 a month, guys. So, it's not like I'm trying to get rich off of y'all. And this is just an area where you can get access to all of the different trade ideas, okay? So there's 1 to 2 a week for free in the newsletter. Okay. And we talked about PayPal, right? We talked about Teladoc. Look at how great those trades turned out. All right. But what we didn't talk about in the newsletter was Toast, Carnival Cruise Lines, SoFi. We didn't talk about Palantir. There's so many more plays in different analysis and stocks that I'm looking at. And you guys can get access to all of that by joining the Discord. Okay. Now we'll get into the video and let's start off here with SWK. This is Stanley Black & Decker. And we mentioned how it's already came down to its pandemic lows. And if you missed that opportunity, it was a really nice opportunity, but there could be one approaching for 2024. Right. If you're not familiar with gaps, okay, that's what these blue boxes are going to be right here. We'll break those down on the daily time frame so you can actually see them. But there's a lot of potential, right? I mean, we're currently at $98. If we were to come up and fill that 114 gap, that's a very nice return on your shares. Okay, there's also a gap up to at 137. Now, keep in mind with these gaps, they tend to fill about 90% of the time historically. The big question is when. And we do need to be cautious because there's 1 and 2 gaps down. So, we're basically right in the middle of a gap down and a gap up, and we're going to see which one fills in first. Now, let's say the stock was to pull back, okay, because currently at the moment, it's got a nice cup pattern forming, right? It's got a nice cup. Let's say we just consolidate, okay, pull back a little bit, maybe even consolidate or trade sideways, for a few weeks or a month or two. That's going to end up putting in a handle, and that's going to end up forming the cup and handle right here, okay? The cup and handle, if it was to play out, would take us up towards that 137 gap fill, okay? So that's something I'll be watching to see how it develops. More closely. If we take a look at our RSI, we're nowhere near overbought right now. So there's plenty of room to run to the upside if this stock really wants to rally on a weekly time frame basis. KMB, okay, is going to be another one that we're paying attention to on the weekly time frame. Actually, before we break down KMB, okay, let's go back to SWK because I forgot to show you guys the daily time frame. So let's break down what a gap is really quick. Okay, so if you're new to gaps, take a look how there's a gap in between this candlestick and this candlestick. This empty space right here, I like to chart those up, okay? I like to just fill it in with a box, and I make it blue, nice and bright, so that way I can know and potentially look for any, trading opportunities on the chance that a stock is going to fill a gap. So there's a very big gap up here to fill at 137 and one at 114. But if you take a look on its most recent rally that it had, okay, coming down from the $75 area, coming up to the, over 100, you can see it created one gap down here and another gap down here. So the more patient investor or trader in this, chance would look for a potential gap fill down. Okay. Now, the thing to remember is we don't know when these gaps are going to fill. It's not so much a question of if a gap is going to fill, but when. So if the market, okay, and let's say some of these other stocks are really catching up and going to catch up to the Magnificent Seven that have all rallied like 100% or more, it seems like. Well, this stock may not come down and fill these gaps anytime soon, right? It could actually try to gravitate and continue showing strength and head up towards the two gaps above. For me, the line in the sand right now on a shorter term trade basis would be 96.15. Okay, if we break below 96.15, there's a very good chance, all right, that if we flip this to resistance, we're going to come down and tag this demand zone here right around $90. And if we break that demand zone around $90, that's when we could potentially see the two gaps fill to the downside. So, you can play it on a shorter term basis, or you could look to, grab some shares, maybe some options, and set a stop loss below 96. So you're risking about $2 a share at its current price to potentially head up to the top of this supply zone here, which is 105. So, risking $2 a share to potentially make $7 a share. And really, you can also target the gap fill at 114 or the gap fill at 137. It's all about your own preference, your own risk management. The thing that I'm really paying attention to right now is going to be the MACD. Okay, notice how it's really choppy right here. Okay, there's been periods in the past where it's been really choppy, and then eventually it ended up getting that MACD crossover to the downside, and you can see that that's when it started a bearish move to the downside, dropping about $20. So if you're looking for, is the stock going to break down, or is it breaking down and potentially going to go on a bearish move to the downside? That's what you're going to be looking for. We'll go ahead and move forward now to KMB, all right, which is again going to be Kimberly-Clark. Now, this has got one of my favorite chart patterns of 2023 setting up at the moment. Now, it's called an inverse bump and run, and it's indicated by this prevailing downtrend that we have, right, with our top trend line here. And then we get this aggressive bump down in the price. So this is the inverse, this is the bump. And if we were to break this trend line here, all right, the run is going to take it up towards the second trend line. And in a perfect world scenario, you're actually just going to run completely past both of those trend lines, break out of them, and take you back up here where the pattern began, which is basically going to be this zone in here from about 156 to about 160. So that would be a really, really nice, way for this to play out. And of course, that's a best case scenario. Now, when we dive a little bit deeper here, it seems that we're getting some Elliott wave structure at the moment. Now, I'm not going to make things too complicated. Elliott wave is just a way to break down the market movements. Stocks typically move in 3-wave or 5-wave structures, okay? And so a 3-wave structure is going to be what's known as a correction. All right, so if you're in an uptrend, you would look for 5 moves to the upside, and then A, B, C to the downside, and then a continuation of the uptrend afterwards, okay? So if that's what we're getting right here, then we already have an A, B, C down. But if this is going to be a 5-wave structure, okay, then potentially the stock could come down towards 115. All right. Or this demand zone that we have here, which is going to be right around 108 to about 112 roughly. Okay. That's going to be a rough demand zone to the downside and where you would look for wave 5 targets to potentially be. So, at the moment, we can't predict the future. We just try to see, what we can do to interpret it to help give us an edge. And so in this case, we know that if it's an ABC, we should get a bullish 5-wave structure out of here that could potentially cause the inverse bump and run to play out. But if this is going to be a bearish 1, 2, 3, and then we have a wave 4 right here, and we come down for wave 5, as this also kind of looks a little bit like a bear flag, right? You have the move down, right? Here's the flagpole itself. And so if we break this bottom trend line here, that's when a likely scenario is that we come down and try to tag, 108, 112, 115, those three targets right there. Now, the inverse bump and run can still play out if we come down here, and then we would look for an A, B, C to the upside to take us towards that second trend line. Okay, so either way, I'm watching this one very closely for the time being to see how it develops and whether or not we'll be able to get an entry at a lower price, or if this is something that could potentially be breaking out very soon. This is another nice dividend stock here that I'll be watching heading into 2025. Now, O is very famous when it comes to dividend stocks. It's Realty Income. It pays dividends every single month. And here, we've got old demand. Okay, so old support, old demand is going to end up becoming new resistance, right? And so from a logical standpoint, you can see here, we came back to test it as demand and buyers were not present, right? There was no demand. So we just completely pushed through. And rather than retesting it as an area of supply, that's what we're doing right now. Okay, so we didn't really do that here where we broke down, came up and retested it and then pushed lower. So you do want to be a little bit cautious at the moment. Okay, what you'd like to see is bullish consolidation, which we're starting to do right now. Okay, we've already had 2 weeks, 3 weeks really where we've came into this prior demand zone that is now going to be tested as overhead supply. We want to see some bullish consolidation here and ultimately a breakout of this downwards trend line. Now, if we do break out for that downwards trend line, $60 is going to be very close to where your 200-week moving average will be as it continues to go down and price continues to go up. So that will be an area to potentially to look for a breakout, then a retest of the same zone and of the same trend line as support, and then ultimately a push higher, potentially to the $70 area. Okay, if we were to zoom in on the daily time frame and take a look at the daily chart, this is another one where the daily MACD is very close to crossing over. Now we've got a very steep and sharp uptrend line here, and we've been consolidating in this area here for about 5, 6, 7 trading days. Okay, so ultimately, we're going to see, basically, do we break this level of support here, break this trend line and come down to potentially test $53, that's a highly likely scenario if we get this bearish MACD crossover right here at the moment. Now, if we don't get that, all right, then that's when we could potentially consolidate, as we were talking about, and break out of this trend line. Notice on the daily time frame, our 200-day moving average has been acting as strong resistance. 1, 2, 3, 4, 5, 6, 7 times we've tested that 200-day moving average and have not been able to trade above it or close above it and flip that area to support from resistance. So, that'll be a key signal if we can start to trade above the 200-day moving average. You can see it also has the possibility of flattening out here, which is going to be, a step in the right direction to potentially going bullish. But remember, if we break this trend line, 53.23 is a reasonable target to the downside. And, there's 1 and 2 gaps down to fill. Okay. So many of these stocks have had a very serious rally to the upside. All right. And if we were to break this uptrend in many of them, there's gaps down that we could potentially fill. So you want to be able to manage your risk, or maybe you want to be more patient and set some alerts around these gap fills. And then maybe that's when you want to get in. Ultimately, I'm just trying to bring you guys a watch list of some of the dividend stocks that I'm watching at the moment and why I'm watching it, looking at the potential setups, whether they are short-term setups or longer-term setups. Hopefully you guys enjoyed today's video. And if you did, you can always reach out to me and click on my Ko-Fi page. There's a link in the description for that. If you click on this commissions tab here, you guys can directly book a 30-minute or a 1-hour coaching session with me. I do these sessions all the time, and some people just want to go over, day trading dynamics, swing trading strategies. They want to go over how to chart, how to draw supply and demand, how to use the fibs, how to use Elliott wave. And some people just reach out for different option strategies that they can use, whether it's leveraging the shares that you own to get some type of a hedge, or many different things. You can definitely feel free to reach out to me on my Ko-Fi page anytime. You can also sign up. Don't forget to sign up for that newsletter. All right, Investment Intelligence. You'll get free valuable content and 1 to 2 free trade ideas every single week sent directly to your inbox. I think you guys will definitely enjoy it if you're a fan of free valuable content. All right, you can go back and check out some of the previous newsletters and see how those have played out. You can also sign up for the Investment Intelligence Discord itself, all right, directly using the link in the description to get access to all of the different trade ideas, all of the different analysis. You also get access to my custom scripts and indicators. All right, as well as the over 35 different chart layouts that I have to really understand market breadth, look at market internals, and break down some of the market dynamics. And those are really, really helpful for understanding whether a current rally in the market is sustainable, whether it's justified, or whether potentially it's a head fake. Thanks for watching. I'll see you on the next one. Don't forget to smash the like button and subscribe for more.